So why don't we go back to the beginning? Tell us about you, a younger Hamish, where you grew up, if there was any one in particular or a book or some type of mentor that you had that sort of set you on this journey towards investing.
Yeah, well, I was always interested in money, and I don't want to say that badly. I was very interested in the mathematics of money. I really like math. I went to University of New South Wales. I started out studying combined law degree, finance and law. The law didn't have a lot of interest in me, so I dropped the law and took up a double major in finance and accounting, and really was keen to get out of the sort of academic world as quickly as I could. And I actually started at a company called Schroders Australia, and I started really on the M&A side. I really wanted to be a banker, an M&A banker. You know, grew up in the 1980s. I guess we all watched Wall Street and those type of things. So I wanted to get in the M&A game. And on the day I arrived at Schroders Australia, I was incredibly fortunate that on the same day I joined, a gentleman called Chris Mackay joined Schroders Australia. And Chris is a bit older than I am. And the chief executive of Schroders, a man called Peter Mason, actually had a lunch for us in the boardroom, and I was this bright-eyed graduate. And then Chris and I went and sat next to each other for the next sort of 4.5 years at Schroders. And on that day I joined, he put 20 years of Berkshire Hathaway annual reports on my desk and said, I guess you should read these. And I sat down and I actually read them all, and I was absolutely fascinated with the whole Buffett philosophy. And then I went searching out for sort of the Buffett influences, what had influenced Warren and Charlie Munger. And of course you come to Benjamin Graham, security analysis. You come to Phil Fisher. Both very, very important in different ways. So I really was influenced really by Chris to start with, but then I was very, very influenced by the whole Buffett, Munger, Graham, Fisher view of the world. So even though I didn't know any of those gentlemen, I've met some of them subsequently, obviously not Ben Graham and Phil Fisher because they're no longer around. But I was hugely influenced by either the eminent dead or by people I had never met before. And I have a lot to thank Chris for that very early influence, literally on the first day I started working. And then Chris and I, of course, went to many Berkshire Hathaway annual general meetings together, and I met Brett Cairns, who's now our chief executive, and he used to come to the Berkshire Hathaway meetings as well.
Do you still get to them?
Yeah, we do. Brett was there this year. I went a few years ago. I try and get there, but you know, you get them. You get the podcasts and you get the live stream pretty instantaneously. But sometimes they remind you about things. They were more interesting when the meetings were much smaller, to be honest. And I will often go back and I'll be at the gym and I will go and say, let's listen to the 1998 or the 1996. Annual general meeting, and I do that quite a lot, and I re-listen to all the old sort of meetings and go back and read writings. Most of them I'm pretty familiar with.
Is that something that you do today? Do you indoctrinate some of the analysts with the 50-year, I suppose, anniversary textbooks, the Buffett and Munger, textbook to investing? Here you go, take the annual letters and go away and read that in your own time, or is that something that you do with your analysts?
Well, we've got a lot of the Buffett stuff around and security analysts. So people know the background and philosophy, but we've developed our own investment philosophy. So while we're influenced, we do things that are quite different to what Warren and Charlie are doing at the moment, and we're in quite a different gear to the gears they're in. You know, I write a lot about our investment philosophy over time. I'm actually just writing another piece that's going to come up in our annual letter as well. I don't force our analysts to read what I write, but there's a lot of other things that are sitting around Magellan that aren't just old Berkshire Hathaway annual reports.
So, okay, we'll get to your investment process and philosophy in a moment, but perhaps you could take us through that next step in your career. Where did you go from Schroders?
Yeah, well, Chris and I actually left Schroders in end of 1994. Actually,
Okay.
I'd started.
You left
in
together?
19. We left together, so I joined on the same day with Chris, and we were hired by a company called Potter Warburg that became UBS. Chris went on to become the chairman and chief executive of UBS in Australia and New Zealand, and I was very, very fortunate that I got to meet a man called Tony Burgess. Tony Burgess is a brilliant person. He was head of the sort of investment banking side of Potter Warburg, based in Melbourne, and I actually moved with my wife just after we got married from Sydney to Melbourne. And I worked with Tony, and then Tony and I and another gentleman called Jeff Cohen, we actually left end of 1995. We left Potter Warburg, and we joined a company that was 40% owned by Rothschild called EL&C Baillieu. And in the end, that business, I became a partner of that business at a fairly young age, and we ended up selling that business. We bought Rothschild out, and then we sold EL&C Baillieu. A bunch of partners there. It was led by a gentleman called Clive Smith, who's a wonderful person. It was bought by Deutsche Bank.
Okay.
And in the end, I joined Deutsche Bank, I think it was in 1997, and I left Deutsche Bank in 2006. I was ending up the co-head of global banking, which is their investment banking business here. So I had a career of 16 years in investment banking and had a wonderful time, met some incredibly smart people, did a lot of advisory work for some of the world's largest companies at a very young age. I think Chris and I, when we left investment banking, I think had done 8 of the top 10 deals, largest deals that had ever been done in Australia between us. So we were very, very fortunate. But investing was in our blood at the end of the day, and Chris had already stepped down and had a small investment company called New Privateer. And I said to Chris in early 2006, why don't we set up a funds management business? And he said, it was just after my father died actually, and he said, it's a great idea. I happen to have already left UBS, but if you manage to get your act together and leave Deutsche Bank, I'd love to do that. And that was kind of the genesis.
Why did you want to move into funds management?
Well, Chris and I had been for 16 years debating investments. We'd been doing a lot of personal investing. We'd been going to Berkshire Hathaway. He had already stepped down, and we just had a passion in the space. So we thought we'd give it a go.
And so, how did you seed the business? Was it just the two of you? What was Magellan like in the formative days?
Well, we did something pretty unique when we set the business up. Chris and I wanted to have something set up for scale, and we decided to do it as a listed company. And what we did is Malcolm Turnbull had a company called Pengana Hedge Funds, and Chris already had a separate listed company called New Privateer. And effectively, we recapitalised this company called Pengana Hedge Funds. We took over the structure. It had $30 million of cash in it, and we raised another $70 million of cash. And people like James Packer and Naomi Milgram came on board as cornerstone investors, of course, with Chris and myself and New Privateer. And we kind of passed around the hat, and we raised $100 million to set the business up in 2006, and we raised a closed-end fund, which was called the Magellan Flagship Fund, a listed investment company. It's now called MFF Capital Investments, and Chris runs that to today. It's done terrifically well, but that was our first funds under management, 370 million, and we raised 100 million to set the firm up. So in a period of 6 weeks in sort of the third quarter of 2006, we had 4 people in a serviced office, and we went out and passed the hat around and raised $500 million, or just south of $500 million. We have to remember that was 2006. And everyone thought we were going to set up another investment bank. And Chris and I were going, we're telling people straight out there, we're not setting up an investment bank. We want to set up a funds management business.
And they were obviously receptive of that because they've handed over a few $100 million.
Yeah, well, look, we knew how to raise money. We came out of that, and we had some reputations for the careers we had had, and we knew a lot of people, and but we were very fortunate, and we were fortunate the timing of when we did it. It may be fortunate or lucky.
Not long before the GFC.
Well, not long before. When we set up the Global Fund, we launched that on the 1st of July 2007, and markets last peaked in October 2007. 2007. Of course, they really started their correction in September 2008, but it wasn't that long before the peak of the market when we really set the business up.